welcome to Spot on the Money. Thank you for joining us. I'm your host, Betsy Hume. I am thrilled to be joined today by the CEO of Fitzwilliams Financial, Mr. Tim Fitzwilliams. How are you, Tim?
Hi, Betsy. How are you doing today? It's great to be here.
I'm doing very well. I'm super excited to have you. I have a bunch of questions for you. You're always such a wealth of knowledge when you come on, so I'm just going to dive right in.
I'll try my best.
And I'm going to dive right in with a topic that seems to be a little bit controversial to some people, or at least I know personally have heard quite a lot of bad things about annuities.
Yes.
Can you do some myth busting for us? Are annuities really as bad as people make them out to be, or what is the deal there?
Well, they definitely can be, and they definitely cannot be.
All right.
It's about, does it make sense for you, right? There's all different types of annuities. That's the first point of things, right? Some are in the market, some are guaranteed and fixed, some are providing income, some provide death benefits. So there's a lot to that. You just can't say that they're all bad. I know some people out there, oh, they're evil, right? Some advisors have been quoted saying, I'd rather go to hell than sell an annuity. And
right.
That's just over the top. You know, it's not illegal, okay?
Right.
And a pension is an annuity. That's the bottom line.
Ah, interesting.
So now how it's been marketed and what you can and cannot do, that's where it gets a little gray. So it's not the annuity as much as it's the person selling it.
Right.
Is the person a fiduciary? Is the person looking out for the client's best interest and running an analysis to determine if they need one or not?
Wow, yeah, that's so interesting because I have heard that same quote you were saying. It's so charged. It feels like the dialogue around annuities is so often negatively charged.
Yes.
But it makes a lot of sense when you say it's not that the product itself is negative. It often has to do with who is implementing it and how they're doing that. What are some of the differences between all of those different companies and products that fall under the annuity umbrella?
Sure, and I think the best way to look at that is maybe what are some of the different type of scenarios that our viewers might be going through.
Sure, yeah.
So for example, if you retire, you work your whole life, and you're making great money, and you retire, you don't get a paycheck anymore. So now what? You have to live off your 401k. So maybe it makes sense since that 401, that IRA, as I like to joke around and call it alphabet soup, those type of plans, their ordinary income, they're going to be income anyway. So maybe you want to build a pension around that in the form of an annuity. It might make sense. Because look, if you retire and you're short $4,000 to $5,000 a month, this is pretty stressful.
Yeah.
So do you want that pressure to go out and have to make a percentage on your assets to cover that 4 to 5, or would you rather have it shored up a little bit and guaranteed? And in fact, it's the only time, Betsy, that we can actually use the word guarantee is when we're talking about an insurance product.
Interesting.
Because at the end of the day, that's what an annuity is. It's an insurance-based solution.
Right. And I think even that is something that most people aren't aware of because of all the static
Oh,
and
yeah, all the hype and everything, yeah.
Yeah, the hype. Why do you think it is that some people are so negatively charged towards annuities and some people love them and think they're, you know, the best thing since sliced bread? Why is there this divide between the opinions?
Betsy, if you could analyze who the salesperson was on each one of those cases, we'd get a clear answer.
Oh, interesting.
I'm going to go on and say that the fiduciary role is not going to put someone in an annuity when they don't need to be. But an annuity salesperson, someone who's getting paid the commission but not putting the interest first of the client, well then, you know, maybe that client doesn't understand all the parameters around that annuity. Look, I can think of stories. In fact, one comes to mind, a couple, they had like $800,000. They had just put it into an annuity and they came to us and they wanted us to take it out and we couldn't because there's a surrender charge. They didn't know the surrender charge existed.
Oh, no.
So complimentary, we said, look, you know what? We like you, you like us. They're like, well, we don't want to deal with that guy anymore because we didn't know all that. So we did what's called an agent of record change, and we were able to take over. We didn't get paid anything for it, but it's the right thing to do to at least kind of advise them with what they do have, right? Whether they want to stay or leave, we can help them with what they do have. So it all comes down to what's going on in your life, and do you understand what you were sold? But sometimes you need it. Sometimes it makes sense. Another story comes to mind, a lady, her husband was dying of cancer, and he had it for a while, so it wasn't like he was terminally ill, but they were concerned about it. So one of the ideas was, well, if I can buy an annuity that paid a larger death benefit because you couldn't get life insurance, then that made a lot of sense.
Oh, sure.
Same with long-term care. Sometimes you can't afford a long-term care policy, or sometimes you can't qualify for a long-term care policy. They put you through the ringer on that.
Yeah.
So if you can utilize an annuity contract to also pay you in the event of long-term care need, then that could be a benefit. So it's not that they're evil, it's not that they're good, it's not that they're bad, it's about does it fit? And then again, it's about who is selling it to you.
Yeah.
If it's a fiduciary who's putting your interest first, then you're good to go because they're going to make sure it fits or they get in a lot of trouble.
Right. They have to, as well as wanting to, I'm sure. Yeah, and it also sounds like annuities are much more versatile than the average consumer is aware of. As you said,
sure.
You can use them to fill a lot of different gaps and niches within your
From
portfolio.
bond alternatives, long-term care alternatives,
Wow.
cash accumulation alternatives. It just depends on what you're trying to accomplish.
Wow.
But in the space of a conservative portfolio, especially where bonds are starting to be threatened by the rising interest rates, they could be a good bond alternative for some people.
Well, we're about to have to take a break, but I have to squeeze one more question in. And forgive
Sure.
me, Tim, it might be a dumb question, but Tim always tells me there are no dumb questions.
There's no dumb questions.
The only dumb thing is not to ask if you want to know. So here's my possibly dumb question. If I have an annuity, doesn't the insurance company keep all my money if I die? How does that work?
Oh, that's a great question. And there's a reason why there's confusion, because what you just stated is a technical term called annuitization. So you opted to turn your lump sum into a pension, just like if you had a pension at your job, right? When you die, unless you make an augmentation to it prior to death, then it goes away.
Right.
Well, it's the same thing with an annuity. If you opt to annuitize, which we're not a component of that, we don't propose that people do that. In fact, we like the fact that annuities allow you not to annuitize and still get paid income for life. And so to answer your question directly, it can do that, but the right thing to do, in my opinion, is to allow the annuity to pay whatever's left over after it's paid out its income. Now, if it's ran out of money, then it's ran out of money, right?
Right.
And if the person got income for the rest of their life, that may be a good trade-off. But if it hasn't ran out of money and the person dies prematurely, then whatever balance is there goes to the beneficiary.
Interesting. Wow, I've already learned so much just in this segment alone. I can't wait to get you back to ask you more questions.
Sure.
We do have to take a quick break. But before we do, I wonder if you can run by the offer that you have for all of our viewers today.
Absolutely, Betsy. Appreciate that. Ladies and gentlemen, those of you watching today, we appreciate you taking the time and doing so. If you would like to understand more about today's topic, which was annuities, are they good for you? Are they bad for you? Do I need to replace my income? Do you have one, but you're confused at how it works? And you want to know how much it may cost you to have it. Maybe you're paying some fee, but perhaps it's not exactly what you think it is. If you want to find out exactly how it works, give us a call. You can have our green light retirement check. You call 1-800-685-3194 and you'll talk to one of my team members. We'll figure out what you want to accomplish in life, what you have, and then we'll analyze it and we'll give you all the answers you want to know so that way you know what you have, right? That's what it's all about. So if you want to know if you have an annuity, if you should have an annuity or not, give us a call. And we will tell you, because we are a fiduciary-based firm, and we will not lead you with our interest first. It will be your interest first. So again, that number, 1-800-685-3194.
Wow, that is such a good point. Folks, as Tim said, the very first step is to know what you have. Before you can know what you need, before you can know what your best next steps are, you have to know right where you're at right now. Pick up the phone, give us a call, 800-685-3194, and get that knowledge so you can sleep better at night. Don't go anywhere. I've got more questions for Tim Fitzwilliams when we come back on Spot on the Money.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
And welcome back to Spot on the Money. I'm your host, Betsy Hume. So thrilled to be joined today by the CEO of Fitzwilliams Financial, Tim Fitzwilliams. How are you, Tim?
I'm doing great, Betsy. Thanks for having me. How are you doing today?
I'm doing so well. I already feel like I've learned so much in the first segment about annuities. You are just a treasure trove, and I'm going to get all the gold coins that I can out of you before you have to leave today.
I'll take that as a compliment.
As you should, as you should. The next thing I want to dive into here is real estate.
Okay.
I know real estate has often been touted as, part of the American dream. That's
Sure.
a big life milestone. I wonder I know this is maybe a hard question to answer, but when clients come to you and ask, is this a good time to buy real estate? What is your answer to them usually?
That's a great question. And I have a little bit of real estate myself, so I do try to answer that question. And I think it comes down to what do you want to accomplish? So is it a good time? From a loan perspective, absolutely. Interest rates are at an all-time low right now. So yes, from buying a piece of property. But it's deeper than just buying a piece of property. A lot of people think, oh, if I have a couple rental properties, I'm good because the mortgage is being paid down. And to me, that's so short-sighted of thinking. It means you're not worried about your ROI, your return on investment today.
Right.
I like to educate folks on methodologies on how they can buy properties at the right place, the right time, the right price, and include in rehab and the work that needs to get done so that they can take that producing asset, go to the bank, have a professional look at that as a producing asset and say, you know what, we're going to let you refinance out the money you put in. So now, Betsy, if you can think about it, you've taken maybe $500,000, done this project, got all your money back,
Yeah.
and you go do it again. And you make maybe $300 a door doing that. See, that's how I like to look at real estate. A lot of people say, oh, well, I just want to pay off my rental, If you ever stop and you think about, I have $300,000 in my rental properties, and I'm getting $1,000 a month. How many thousands of months do you need to be able to get back that $200,000? Are
you going to be alive that many months?
Correct.
Yeah.
So people need to look at the real estate as an investment, as a cash flow center. From what I see from the people that I've been around that are doing it big, look at it that way. They want their ROI now. The average person's not a hedge fund just looking to park some dollars real quick.
Right, no.
Okay, so if they're looking to get into real estate or they're wondering, should I have this rental? Try to make as much money out of it as you can. So if you're there today and you're looking at real estate and you're thinking about rentals, or maybe you have a rental portfolio, I don't mind talking to you about that and going through that. A lot of advisors won't. Give me a call. Call our office, 1-800-685-3194, and we'll talk to you a little bit about some of the strategies we utilize to include tax deduction strategies and to include increasing your ROI. And most importantly, making it passive. People say they're real estate investors and they're out there hammering away. That's okay, but that's not an investor. You're in there doing it.
Right.
The concept is, how can I make the profit and make that real estate work for me so I can sit back, relax, and have that cash flow come in a truly passive model? Because you do what we do, which is hire the best. So you do what you do best, you trade for the rest. If you're an engineer, you don't need to be trying to be the realtor and try to, survey who's going to be your renter.
Right.
It's too much work.
No.
You want to start pulling credit reports and doing all that? You don't need to be in control. You have to give that up. But it's okay if you did it right because the profit will allow you to do it. And then you can stack it and stack it and stack it. So instead of having 2 or 3 properties, you have 20 or 30 properties or more.
Yeah, wow, such good advice. So what would you say to a client of yours that already has 1 or 2 properties, say, and they're looking to invest in another one? Would you recommend that they take out a loan on this new property, or do you think it's more intelligent to use leverage on existing properties?
I have that asked all the time.
I bet.
Interest rates are super low. Take out a loan.
Really?
Take out a loan. Don't pay cash. Opportunity cost, as we talk about in economics. What is the cost of doing this? Because you could have had your cash making you money. We had a person that had $1 million sitting in cash that wanted to do exactly that. They're losing about $50,000 or more a year, not because of market, it was sitting in cash. Because of the opportunity cost, they could have been making that had it would have been deployed effectively in the right investments that fit their needs.
Right.
So if you're looking to invest in real estate, use other people's money.
Yeah.
That is the key. Use the loan while it's cheap, while you can do it. Even using your own equity on your home through a HELOC. That's a beautiful gift, right? do anything you can to leverage other people's dollars to be able to get the real estate portfolio that you want.
That is so interesting and good to hear. You know, I feel like it's maybe advice from a past generation.
Oh, yeah, pay it off and all that, yeah.
I remember when my parents paid off their mortgage, they were thrilled. They had a little party, and I thought, wow, this is a big milestone for them in their life. Of course, now, who knows what they could have done.
Right, and then I bet you what's funny is the next month when they got that bill for taxes and insurance, they're like, wait a second, why do I still have to pay? I thought my mortgage was paid off.
Yeah.
Because you still have to pay things.
Yep.
So it's not as freedom fulfilling as everyone thinks it is.
Right.
There's more to it. So if you could keep that note and take those dollars that you would have paid there and reallocate that, whether it's into investments or more real estate or what have you, you're going to get a better ROI.
Yeah, definitely.
Especially when rates are like 2%, 3%, 4%.
I mean, yeah, when it's the way it is, come on. So we do have to take another break soon, I hate to say, but I want to squeeze one more question in, which is that, you know, I have often heard that real estate is the best investment there is. Do you think that that's true? I know that might be a hard question to answer, but do you think, again, is that an antiquated way of thinking, or is it really one of the best investments that you can go for out there?
It's a great investment, but it doesn't do everything. It has functions to it, but no investment's going to have all things. It's not going to be, you know, tax advantage. It's not going to be guaranteed. It's not going to be income oriented. It's not going to be growth oriented. It's not going to have all of those things. It's just, that would be the super investment of the world.
Right.
So everything has its piece. Real estate is a great place to invest. It's not the only place. It's a tool in the toolbox. It's a way to diversify. It's great for tax advantage. It's great for income. It's good for growth, but it's not a hedge. It's not safe. It's not guaranteed, and it's not liquid.
Right.
So these are concerns, right? So it's not the end-all, be-all for everyone, but it is an excellent diversification tool. And a lot of advisors say the opposite. They want to see people cash out of real estate to invest. And I'm not saying to do that. I'm saying to have a loan and use cash and invest. I'm not saying get rid of the real estate. There's a difference.
Definitely. Yeah, wow. The more I talk to you, the more I realize that everything is so complicated and nothing should be all or nothing, right? Everything should be a little bit of each pool to work together so that you're left with the best possible outcome. We do have to take a quick break, but before we do, I want you to run by our viewers one more time this amazing offer that you have for them.
Great. If you're listening today and you're watching us and you think that you may want to have a green light retirement check and understand your current, maybe you have a real estate portfolio and you want to understand how you can better your ROI on that real estate portfolio. Maybe you have some renters and you're starting to get annoyed of being the landlord and you want to know what alternatives you can do to help yourself out with that. Feel free to give us a call at 1-800-685-3194. You'll talk to our staff and we will talk to you about your real estate portfolio. We'll bring in experts to help you understand. Should you take a loan out? Should you not? What type of ROI are you currently getting? Is it worth it to keep it? Is it not worth it to keep it? What type of spread should you have? Are you taking the right tax deductions? You want to know those answers? Give us a call, 1-800-685-3194.
Wow, so many things to keep track of, so many moving parts. I think it would behoove you to take one thing off your plate and give Fitzwilliams Financial a call so that you have a really experienced professional set of eyes looking at your portfolio for you. 1-800-685-3194. Give us a call and please don't go away. I still have a few more minutes with this guy and I'm going to squeeze all the juice I can out of him. We'll be right back on Spot on the Money.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Hello and welcome back to Spot on the Money. I'm your host, Betsy Hume, and I'm so happy to be joined today by the CEO of Fitzwilliams Financial, Mr. Tim Fitzwilliams. How are you, Tim?
I'm doing great, Betsy. Thanks for having me again.
It's my pleasure.
How are you doing?
I'm doing great. I do a little bit better every time I have you because I learn a little bit more. I feel
that's great.
a little bit more empowered.
That's what it's all about.
And I actually do want to talk about that a little bit, is empowering do-it-yourself investors.
Sure.
Is that something that you recommend people do, to try and do it themselves, or do you think there are a certain category of people that can? What's your take on that?
That's a great point. And the truth actually hurts.
Often does.
Unfortunately, how much money someone has is what allows them to figure out what they can get invested in or not. There are products, solutions, investments, and strategies that have labels on them that you can't get unless you have a certain amount of net worth. I don't want to get into the great details, but folks at home, if you want to Google accredited investor versus qualified investor, you'll see there are certain solutions that you can only get in. You want to figure out how to get into a hedge fund, you want to figure out how to get in a master limited partnership, you'll see how these things work. So as a do-it-yourselfer, you're never going to find out about any of that.
Right.
Maybe you do qualify, but there's no way you're going to find out about it unless you're led to it.
Right.
So it's one of those things that you can be a do-it-yourselfer and get by just fine, but you won't have all the information. There's too much. And your wealth may be limiting to that information. But if you go to an advisor, we can explain it all to you. You may not qualify for it, but you can at least understand what's out there. So that way you have the understanding of what you can do, or maybe that's what you aspire to do.
I also always think of it as kind of, do you remember when Webmd first came out and everyone thought that they were a doctor and they could do their own health care? I feel like that's true to a certain extent, maybe if the stakes aren't too high and what you're dealing with isn't too dangerous, but then you do inevitably hit a wall where you just can't you don't have that knowledge, you don't have that experience, and you can't help yourself the way you really need to be helped.
Hey, you're not seeing the case studies, you're not seeing the statistics, you're not understanding what that data really means, you're just seeing the marketing tagline.
Yeah.
And to WebMD's point, it's because they want you to call a real physician.
Exactly.
They want you to go to a doctor. They're just trying to say, we're giving you enough to wet your whistle so that you go and do the right thing.
Yep.
It's the same thing in our business. You're going to hear about something and it might attract you. I said that to be attractive to you, like, for example, the master limited partnerships. Okay, well, how are you going to find out about those? You're going to have to call an advisor. You're going to have to build a relationship with someone that can talk to you about those things.
And especially, I would think, if you were one of those DIY investors and then you got hit with a market like we have right now that's so volatile, what are some pieces of advice that you give to people who still really want to do it themselves, but they're faced with this really intense situation?
You have to ask yourself, are you really meant to do this?
Yeah.
You really got to ask yourself, do I want to be in charge of my portfolio when it's rough? It's easy to make money when the market's going up, and we haven't had a rough spell for a long time. But if there's volatility coming, which is overdue, if volatility is coming, you want to be in a situation where you don't have to worry about it. And here at our firm at Fitzwilliams Financial, we went and got the best, which is a chartered financial analyst, a CFA. It doesn't get any better than that. It's one of the hardest tests in the world to pass. And so that's who's managing the portfolio of our clients. And to that testament, in 2008, when the market lost 50%, he lost 25%.
Oh, wow.
It took everyone else 4 years to get back to where they were. But because he's so in tune and rebalances and looks at this stuff every Friday, we don't dare call him. He got it all back in about 8 months.
Wow.
Now, look, that doesn't mean he's going to kill the market on the upside. So you might be like, his performance is good enough or it's okay. But it's that volatile time when the smartest person in the room is who you want driving the boat.
Absolutely. It's that famous quote. What does Warren Buffett say? The #1 rule of investing is don't lose money.
Absolutely.
It's even more important than making a bunch of money, right? It makes a lot of sense to me. So if I am a very stubborn DIY investor, what are some tips that you can give to let people know if their portfolio is good or bad?
Well, first let's identify if we really are a DIY, shall we?
Please.
I think that's step one.
Yeah.
Because just because you bought some stuff doesn't mean you really are a DIY.
Right.
I want to give credit where credit's due. If you're a DIY investor, then I believe you deserve credit. It means you're putting in about 25 hours a week.
Oh, wow.
It means you have a subscription service to a credible news source to understand what's going on in the market at a more technical level. And you also are probably subscribing to some type of chart service so you can see trends and study those things. And if you're doing that, then yes, Betsy, I believe you're a DIY person.
I'm not. I thought maybe I was, but now you've made it very clear to me. I am not a DIY investor.
And I think that's the confusion. A lot of people think, oh, I'm good, but they're not doing those things because you know what? You didn't have to the last 10 years. It's not needed. But as you said, volatility is here, it's coming, and it's probably going to continue, which is nothing more than normal.
Yeah.
If we go back and ask our grandparents and great-grandparents, they're going to say, yeah, the market goes up and down, up and down, up and down. And retirees will say, yeah, I've seen multiple up and downs. But we just haven't seen it in a while.
That's the thing, right? Yeah, we've gotten a little spoiled, so it's
We sure have.
easy to think that it's no big deal.
And it's easy, right? It's not a big deal.
Yeah.
You know, the rising tide raises all ships.
Yes, yes, very true. Well, are there any asset classes that you prefer or that you particularly dislike when you're working on investments for your clients?
I won't say dislike, and I don't try to be the investment advisor that's going to say I know all things. Again, I have the lanes. Our CFA has built multiple different portfolios based on the risk tolerance. So what I really want to say there, Betsy, to your question is based on your risk tolerance.
Sure.
Based on your lifestyle. What do you need as far as income? Maybe you need income replacement. Maybe you don't need income replacement. Maybe you want to make sure you can go on a $5,000 vacation every year. Maybe it's a $50,000 vacation every year. Well,
Sure.
how are we going to guarantee that, or how are we going to make sure that happens?
Well, I'm so sorry to interrupt,
you're
but
fine.
I feel like that's almost more comforting that it's not cookie cutter. You
No,
want
it's
it
not.
to be individual
It's
to you.
extremely complicated because there's so many factors to that.
Yeah.
And that's, again, where the DIY person starts to lose sight because you get into tax planning, you get into estate planning, you're getting in, of course, the investment side of things,
Yeah.
right? But you're getting hit by these other factors
Yes.
that is almost impossible to do in a DIY model, at least do well.
My eyes are opened. I understand now. We only have about a minute left on the show.
Sure.
Unfortunately, I wish I could keep you all day. But will you let our viewers know one more time what the opportunity you have for them today before we close out the show?
Absolutely.
Thank you.
Ladies and gentlemen, if you're interested in understanding, if you are a DIYer and you want to try to do things on your own, that's totally fine. But if you're interested in understanding more about what you have, are you in the best position? Or maybe you're the DIY person that you want to do some, but maybe you want to give up a little bit just so that you have somebody partner with you to help you navigate through these times. We're not saying you have to give everything to a firm like ours. What we're saying is you want to know what you have and decide what positions you should be in that's going to match your lifestyle. If that's you and you want to find out more, give us a call, 1-800-685-3194.
You heard him, folks. We'll see you next time on Spot on the Money.